Guys, the Russell 2000 Small Cap Index is getting a lot of attention because it's up huge in the last month. Year to date, up 11.64%. In the last month, up 11.15%. Pretty much all the return has come in the last month. In the last 3 months, up 15.41%. Now, if you recall, one of the reasons in the past videos I talked about how I thought the market was overvalued was so much money was going to large cap stocks, that the discrepancy between small caps versus large caps was huge. Now, over time, studies have shown that small cap stocks do outperform large cap, and it makes sense. Why? 100 million. But first off, a small cap stock is between 250 million and 2 billion is roughly the number. Now, are there small cap stocks that are in these indexes that are valued much higher than 2 billion? Yes. But over time, is it easier for a $250 million company to 10x or a $25 billion company to 10x? I think the answer is clear. How much of a difference? Studies have shown about 1.6% from 18 until 2020. So basically 100 years. You might sit there and say 1.6%, that's not a lot of money. That's a huge amount of money. It is ginormous, okay? Now the Russell 2000 is a small cap index of roughly 2,000 small cap stocks. There's another small cap index, the S&P 600. So what I'm going to do here is show you guys the performance difference between the Russell 2000, the S&P 600, and the S&P 500, the large cap index. But there's something very important I want you guys to understand. Lately, the performance has been driven by large cap stocks. And I'm sure you've heard that, but it's really, really key to understand that. And the reason being is these indexes, as they rise with large cap, as those large caps tend to fall, what's going to happen in the index? They're going to fall very, very tough. Now, Tom Lee, the guy I did a video about recently who said he thinks the price target on the S&P for 2030 is 15,000. He has recently said that he thinks small caps going to outperform. Gee, isn't that interesting, guys? Where the stock price goes, the news goes. I want to repeat that till I'm blue in the face. Where were these guys back in the day? Prime example was the amount of ridicule I took by buying gold mining companies back when gold was at $1,700, $1,600, $1,800 per ounce. Now, all these people are coming out saying gold's a great investment. I'm not saying it's a great investment or a bad investment. All I'm saying is news follows the stock price. Now that gold has had a nice run, people follow it. Now that the Russell is having a nice run, people are following it. When NVIDIA was having a nice run, people were following it. That is what's key. That's what I want you to remember from this. That's what people in our community always discuss. It's about understanding where you want to be and where people are going. If people are already talking about it, it still could have a lot of room to run. I don't disagree that small cap has a lot of room to run. There's a lot of cheap companies in the small cap environment. One of the analysts who works for me through Everything Money was a user, was part of our community. Now I've hired him. He loves small cap and he does a great job with small cap because you really got to go in the weeds and really understand the company. Because even though those companies have a lot of growing potential, they also have a lot of failing potential. But overall, they do outperform over long periods of time. Now, another thing, the current S&P dividend yield is about 1.3%. The Russell 2000 is about 1.19, so 1.2%. But remember, these are smaller companies. Smaller companies with a lot of growth potential need to reinvest their cash flow to get that growth, not pay it out as a dividend. If they have growth potential, reinvest, maximize that growth by reinvesting all your cash, not paying a tax inefficient dividend. Now, in the Russell 2000, values range from 250 million all the way up to $13 billion or more. So there's a lot of big range there in terms of value. Now, let me show you this performance difference. Purple is the S&P 600, the small cap purple index total return. What is this? Orange or peach is the Russell 2000, and light blue is the S&P 500 going back to 1995. Guys, look at this. The Russell 2000 has drastically underperformed these the S&P 600 and the S&P 500. I'm not telling you one's better than the other, but the performance here. Now look at history though. You look at this, the S&P and the Russell have pretty much been in line up until up in about 2018. And then, as we talked about, large cap companies have really soared, especially after COVID. But look at the S&P 600. The S&P 600 since 2004 or so has drastically outperformed the Russell 2000. Now, I'm not endorsing one over the other. I'm not saying you should buy. That's 20 years of outperformance. Is that a long time? It kind of is. And it does make sense that a more diversified group of companies would perform worse than a more concentrated 600 versus 2,000 companies. That is a big difference. But these are the interesting things you have to sit there and understand. So the question is, are they going to rally and go higher? Guys, I know sometimes people watch channels on YouTube to sit there and get an answer of where things are going. The honest answer is no one has a clue. Do I think over long periods of time, as small cap, especially starting at this point, will outperform large cap? I do. But I still buy large cap. So that's the interesting part. I still buy large cap. Now, would I be open to buying a small cap ETF? Absolutely. It gets me small cap exposure. Doesn't have to have me go through the weeds and pick small caps, etc. But I do believe small cap makes more sense for growth over long periods of time. Now, keep in mind, I would focus on an ETF, not on a small cap mutual fund, because mutual fund has restrictions. If a company grows to 5% of the fund, it's got to exit. And at that point, when these companies are running, you don't want to stop their running from happening. That's what's very important here. Maybe you buy a small cap, a mid cap, and a large cap ETF. Those are important things to consider. One leaves the small cap, goes to the mid cap. Something leaves the mid cap, goes to the large cap. These are the things that can help you be a better investor and dollar cost average along the way. Now, if you're interested in buying smaller companies, that's where our community is so incredibly useful. It allows you to talk with thousands of other investors out there about the things they find in these companies. And these companies, it's really important to do very detailed research before you buy a small cap company. And you've probably noticed that we have a limited number of daily spots for our community and our software. And the reason for that is because the software as it exists today includes everything, all of these tools that we have to offer for stocks, retirement, and even real estate. Now, we are making some changes behind the scene. So in the near future, that current offer is absolutely going to go away forever. As we've been getting feedback from our community members, people have expressed that they want us to focus on specific aspects of our tools that apply to them at that moment in time. They don't want to have too many options like the Cheesecake Factory. So if you've been watching our channel for a while, you'll remember that this software was built originally selfishly for myself so that my team and I could use it to make better decisions for stocks, real estate, and retirement. But as we've grown, our channel and community, it's becoming less about me and more about how I can better serve you and our community members with the tool. The good news is, though, we have not made those changes yet. So if you join today at the link in the description below, you'll be grandfathered in for life with all the tools, and you can use them as certain parts of your life hit those tools needs or not. This is the best deal that we've ever offered, and I'm telling you this now because there's still time for you to sign up as long as you join the EM community today before we make these changes. So click on the link in the description below and get access to the Everything Money software. It's the best decision you're going to make all year. Now remember, that's for individual stocks and for ETFs to be able to have these conversations. Because remember, investing is about the proper mentality, the proper stomach. Everybody has the brain power, as Peter Lynch says, to buy stocks. Who has the stomach to do it? And it's not just about individual stocks. Guys, look at this. Look at these big drawdowns. Boom, 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 boom. These are big drawdowns. Even on an ETF, it can feel like the world's coming and falling apart because the news out there will be telling you that. But it's important to be able to have that stomach to be able to do it, and that's how our community helps. If your outlook is a long period of time, all the more reason, I think, in my personal opinion, to get involved in small caps. How much? That's up to you. Now, we have said that they tend to outperform. But look, if you bought Russell 2000 back in 1995, thinking it was going to outperform, you've greatly trailed the S&P. You matched it basically until about 2018. Does that mean this is going to be forever? No, I doubt it. My guess is that small caps will have its time. And it's probably going to be, if you look back at the dot-com boom and bust, there was a real growth in small cap investing. Small caps were way undervalued compared to large caps. Let me show you more. Here is the Russell 2000 versus the S&P 500, the year before the dot-com crash started, and for 10 more years. Russell 2000 total return 71.28, S&P only 10% total return. That means including dividends. Why? Because of the overvaluation that occurred. And when the bubble burst, look at the S&P's return, look at the Russell 2000 return. Now, did it still struggle along the way? Of course it did. Did it have a big drop? Yeah, big drop during the great financial crisis, but it rebounded strongly from there. That's what I'm trying to show you about. These things come in cycles, and the goal for you is to have exposure to all these areas. That way you don't rely on one certain thing. What you have to work on is FOMO. Make sure you don't have the FOMO of going, man, I'm missing out all these gains. Over long periods of time, things will work out the way they're supposed to. So what I encourage you to do is find an ETF for small cap, whether that's the Russell 2000 or the S&P 600 or some other one, and figure out a way to add it to portfolio. If you want to figure out how to buy individual stocks better with a portion of your portfolio, we're a wonderful place to be. You should subscribe to the channel. More importantly, click the link in the description below. Join our community. It'll be the best decision you've made all year. And if you want to see the 18 companies that are part of my portfolio, watch this next video. Thank you for your time.